I think the worlds of public equities and crypto will increasingly merge and become one. And I think when a lot of people hear crypto, they're thinking about meme coins or maybe Bitcoin, and it seems like this is not a very serious thing. But if you're thinking about what's happening, the time from getting an idea to listing an asset on a blockchain has effectively gone to zero, right? And juxtapose that with what we were talking about earlier, how difficult it is to take a company public. My view of crypto is it's sort of the next step in how financial infrastructure evolves. You'll see traditional financial services on crypto rails. They'll be easier to use, better, more interoperable. And I think the US will have to adopt it. The efficiency gains are just going to be too high to ignore.
Did you know that Robinhood, the app that changed how millions of us invest, is making a huge bet on Bitcoin? That's right, Vlad Tenev, the co-founder of Robinhood, is diving headfirst into the world of crypto, and he's got big plans for the future. But why Bitcoin? Why now? And what does this mean for you as an investor? In this video, we're breaking down why Robinhood is taking such a bold step, what it could mean for the future finance, and how Tenev plans to bring crypto and public markets closer than ever before. Stay tuned because this might just change how you think about money forever. Oh, and we'll also spill the tea on whether Robinhood is planning to hodl Bitcoin themselves. Let's jump right in.
One product that you've announced and have scaled very significantly is the crypto trading on Robinhood. Again, you guys started out with public equities, and many of the maybe popular crypto applications or platforms, they started out with crypto and now they're considering going towards public markets. You guys kind of did the reverse, but it looks like you guys have $38 billion in crypto assets under custody as of November of this year. You've done about $119 billion in notional trading volume in the last 12 months. And to put those numbers in context for people, you're doing a little bit more than 50% of Coinbase's trading volume in crypto, but you have like 1/10 the number of coins listed. And so talk about this idea of public stocks and crypto kind of coming together and merging into one area where obviously you have a big public equities business, you've got a really big crypto business too, and it seems like you guys are benefiting from this merging and really owning that relationship with these users that want to invest across both markets.
I think the worlds of public equities and crypto will increasingly merge and become one. And I think when a lot of people hear crypto, they're thinking about meme coins or maybe Bitcoin, and it seems like this is not a very serious thing. But if you're thinking about what's happening, the time from getting an idea to listing an asset on a blockchain has effectively gone to zero, right? Like it's very easy to list an asset and get access to global liquidity in an increasingly large and global market. And juxtapose that with what we were talking about earlier, how difficult it is to take a company public. You have to go through a ton of process. Not a lot of people even want to do it anymore. And so there's this unmet need. And I think these two things will converge eventually. And what'll happen is traditional equities, and I think all of this will be accelerated by the new administration. Traditional equities will move onto blockchain rails along with all sorts of other real world assets. You'll see private companies going on blockchain rails as well. Once you have public companies, then you'll have to think through what does it mean to actually go public and list on a blockchain as opposed to on a traditional stock exchange. So I think we'll have to figure that out. And then that opens up private markets as well. And what you gain is interoperability. So I don't know if you've tried to move stocks from a legacy discount broker to Robinhood. A lot of people do it, and it's very, very painful. And by the way, the big brokerage houses don't want to make it easy.
Of course,
like they want to keep those assets there, so they'll put all sorts of non-technical barriers in the way too. But contrast that with how easy it is to move, dollar stable coins or Bitcoin from your MetaMask wallet to your Phantom or your Robinhood wallet. Everything just kind of works because the infrastructure underlying the assets and the transactions is all public. So you have no need for transfer agents, for central clearing houses, for payment processors. All of that's replaced by software. And so I think my view of crypto is it's sort of the next step in how financial infrastructure evolves. It started with pen and paper and filing cabinet. It went to mainframe. It went to on-premise and cloud. And then crypto is just the next layer there, where you'll see traditional financial services on crypto rails. They'll be easier to use, better, more interoperable. And I think the US will have to adopt it. The efficiency gains are just going to be too high to ignore.
You mentioned kind of this, tokenization of stocks, essentially, and there's a couple of things I want to dig in here. So first is the friction seems to be both. There's a regulation friction, but there's also a technology friction. And so is it something where if Robinhood tomorrow says, you know what, we're going to create these tokenized stocks, maybe we'll hold the share certificates, in some sort of vault, and we're going to offer up this tokenization, and we're going to be the first ones, and we're going to go try to get our, kind of friendly competitors to start to accept this technology, and like it can be an industry-led, adoption of this? Or is it a regulatory thing and we got to go get the regulators to all agree to this, and then the technology companies are ready to do it? Like, how do you see us going from where we are today to actually being able to offer this to users?
I think the impediments are mostly regulatory. It's by and large regulatory. The technology exists, and you already see it with dollar stablecoins, right? I mean, dollar stablecoins are a primitive form of tokenization. I think the next frontier there is going to be getting the yield passed back to users into their wallets directly, and doing that in a very clean way across multiple jurisdictions. But it's a very similar process. The underlying asset, which is traditional dollars in this case, are custodied somewhere in a big bank or in the form of treasuries. It's tokenized. There's software that makes sure that it's one-to-one, and then the tokens trade cleanly on exchanges. I think that same concept can be applied to any asset and will be. So technology is there. It's just a question of the regulations. And I think actually in Europe, MiCA regulation's a little bit further ahead. And so when that goes live, this will become possible.
That's interesting, because a lot of crypto people I talk to will say the MiCA regulations are hurting the crypto side, and they don't like them, and they think they're kind of overbearing. But maybe there's some nuance here of it may hurt crypto, but help the public markets become more tokenized. Is that true?
I mean, I think that it's all relative. I think that the regulation by its nature sort of like limits what you can do, right? But by doing that, it creates trust with customers. They know that there's some guardrails. And I think there are a lot of people in crypto that just feel like they should do whatever they want, and that it's software and technology. And I think that's not very realistic. But you compare that with what's happening in the US. And in the US, there's a lack of clarity. Companies have been just getting sued left and right. And there's almost been a disincentive to come in and talk to the regulator, because if you come in and talk to the regulator, that increases the odds of getting a Wells notice. So this whole come in and register thing was a fiction. It was like almost a honeypot to get you to come in and prepare a Wells notice for you. So certainly it's better than that. And I think that we can find a good middle ground where people can get the protections, companies can innovate pretty freely. Maybe it's not the Wild West, but at least it's like a healthy balance between these two opposing forces.
You mentioned the new administration may be able to help with some of this. Obviously, you have President-elect Trump, who's coming in, and he's really positioning himself as kind of the first pro-Bitcoin, pro-crypto president. It seems like a lot of the cabinet appointees own Bitcoin or crypto assets. His family is even launching crypto coins and kind of participating in different ways. And then you have Paul Atkins, who's coming in as the SEC chair, who also seems to be much more friendly to crypto. Is it something just as simple as, hey, top-down message, let's be less abrasive, let's embrace this, and that should help us on the regulatory front? Or are there still, in your opinion, open questions around how do we deal with decentralized assets or, issuance, disclosures and things like that?
I think there's a lot of things that still need to be worked out.
Mm.
One area is stablecoin treasury management and the framework around which you can actually deliver yield to holders. Do they have to be KYC'd? Can you receive the yield in non-custodial wallets? All of that is very murky in the US now. There's also the security status of coins themselves. Is a particular coin a security or a commodity? And you're probably familiar with this. If it's a security, it would be regulated by the SEC. If it's a commodity, it's CFTC. But which one is which? And for the securities, we'd like to be able to offer those too. So then we would need a framework for those that are securities. Because I think right now the approach that the at least regulated cryptocurrency players in the US have been taking is everything they list is a commodity. They can't conform to the securities laws. They don't want to. And so they've been listing commodities. But I also don't think everything is a commodity. I think there are things that are securities and people would benefit from being able to trade them, which requires a framework for actually listing crypto asset securities in a way that doesn't actually get rid of all the advantages of using crypto rails. So you want to figure out how to list them on public blockchains where they're interoperable with the broader crypto ecosystem. And then tokenization, I think, raises its own challenges that if we solve the first set of problems I outlined, I think you'll get to a world where tokenization is also permissible.
One of the other things that potentially is a promise of tokenizing these stocks is 24/7 trading. And it's a little weird because it feels like the public market is moving towards that 24/7. We used to have kind of traditional hours of operations. Now there's the overnight trading, which isn't still 24/7. It's kind of sort of open to some people.
Yes.
And it feels like we're kind of inching there. But tokenization, where there is not only the ability to kind of move assets between these different venues, but also trade at all hours of the day, seems like it would be a pretty big accessibility, increase, and also probably would be a much more global approach to allowing people to access financial markets. What are you guys seeing there?
Well, we basically popularized that offering with 24-hour market. So we offer more than 1,000 stocks 24/5, to your point, not 24/7. And I think that galvanized the broader ecosystem to try to figure out how they can offer it. Now you've got exchanges saying that they're looking at how to extend the trading hours to 24/5. But it's been hard. And we had to build a lot of technology to stitch together these market centers and seamlessly kind of move a customer's orders from core market trading at one exchange to after hours to overnight. So it's a lot of heavy engineering work to stitch this together in a way that is not a terrible user experience for the end user. And it's still not 24/7 because the mainframes at central clearing need to run on the weekends, and people have to do that. You need employees, and that's a big hurdle, right? Compare that with the blockchain, which is just running on servers 24/7. You don't have to do any of that extra work. And it's a very nice user experience, particularly for customers internationally, where there's less overlap with US East Coast working hours. So that's big. And also fractionalization is big. We had to do a lot of work when we popularized fractional share trading to take whole shares of stocks, split them up into little pieces so that you can buy, $1 of Berkshire Hathaway A shares, which is kind of this magical experience that I don't think Buffett and Munger really appreciated. Then they have all these small shareholders crashing their annual conferences. But I think it was progress, definitely progress for the world. But yeah, with crypto, you can just take slices and fractionalize, and that's kind of built in. So it's not just efficiencies and costs, but real user experience improvements to end users.
Another thing that has become very popular, you're a publicly traded company, you see other publicly traded companies buying Bitcoin and putting it on their balance sheet. Some people are doing it at grand scale, like the MicroStrategies, and they're buying, tens of billions of dollars, and it's kind of become like a Bitcoin treasury company. You have many other companies like a Tesla or Block, formerly known as Square. They bought some Bitcoin. They kind of left it there. They're not really Bitcoin companies. You guys are in the crypto business. Have you guys ever thought about adding Bitcoin, or has there been any conversation as to why you should, or maybe there's a good argument as to why you should not put Bitcoin on the balance sheet?
Yeah, I mean, it comes up from time to time for sure. One of the reasons it comes up is because we just are getting more involved in crypto. And in some cases that would involve us holding different coins. And already we have to do the work of accounting for it. And it's essentially on the balance sheet anyway. So there's a real reason of if you have to transact in cryptos, you have to maintain some holdings of them, and they're kind of there by necessity. Then there's the other angle of sort of showing a sign of support that we're a crypto company, we're here, we buy into the technology and the promise of it being an inflation hedge. So it's kind of there as well. I think the reasons to not do it is, if you are a public market investor and you're thinking about Robinhood as a company, generally speaking, you're not it complicates the picture to think of it as a company, but also this quasi Bitcoin holding play. And I think Robinhood stock is already highly correlated with Bitcoin as such, without us even holding it on the treasury. So, I would say we wouldn't rule it out. We haven't done it thus far, but those are kind of the considerations that we have. And to some degree, you could put any asset on your balance sheet. And we're not in the business of being an investment manager. So, I know some companies have done this. Airbnb, actually, I think if I remember, made a lot of money doing this with their CFO LT pre-IPO, just managing the cash on the balance sheet and investing it. But that always seemed like a departure from the core of the business, taking that approach.
This is free advice, so you're going to get the quality of what you pay for. But I always thought it'd be hilarious if somebody bought a little Bitcoin and also put a Berkshire stock on their balance sheet and said, "Hey, we're gonna, we're gonna have one of the new world, one of the old world." But to your point, I don't know if public market investors would be thrilled if you guys were running a prop shop basically with the balance sheet.
Yeah, I mean, I think that again, as long as it's in the context of operating as a business, I think it makes some sense. But investing the balance sheet of the company, then you get into kind of murky territory.